If a technology is being hyped, companies are going to attach themselves to it. It's a tale as old as time. Now, Bitcoin mining is a thesis that we've never found appealing, but that's not what this is about. You find it appealing, and now you're being led to believe that Bitcoin mining stocks are a play on AI. Is this true? Are Bitcoin miners the next NVIDIA? We're going to answer those questions and more. So let's start by looking at the Bitcoin miner that led to this video, CORZ. Now, we last wrote about CORZ back in February of 2022, and we said here that Bitcoin's a volatile asset, and weathering that volatility is a whole lot tougher when you have a giant energy-hungry server farm that needs Bitcoin to stay above a certain price or it starts bleeding cash. Well, just months after we wrote that, CORZ filed for bankruptcy, citing a number of factors, including, surprise, a decline in Bitcoin prices, rising energy costs, unpaid debt from Celsius Network, which was a major customer of theirs, and disruptions from other crypto industry partners. So people would have been wise to simply just invest in Bitcoin instead of trying to get the leverage from the miners. But when we look at CORZ today, so CORZ, CORZ, that's the ticker for CORZ Scientific. They emerged from bankruptcy protection earlier this year, and now they're again among the top mining companies by computing power. So they have 1.2 gigawatts of contracted power that they can use to produce Bitcoin, among other things. So that's very important to note. And that contracted power they can use then to do a variety of different things with it. Right now, the majority of what they're doing is earning Bitcoin for their own account, what's called self-mining, and they're among the largest data center operators in the United States. Now, when we look at the companies that are producing the most Bitcoin in North America, they're listed out here. This represents only self-mined Bitcoin. So you see CORZ producing the most, then you have Marathon, Riot. There's some other familiar Bitcoin mining names here. So this is a simple business model. Produce magical internet money for less than the current price. We refer to Bitcoin sometimes using that terminology, mainly because it stirs up the pot, but also because people need to remember that what we affectionately refer to as crapto has fleeced the hell out of lots of naive retail investors. When you have an investment theme, and I stretch the term investment when I describe cryptocurrencies. When you have a theme where the scams are measured in tens of billions, that's highly problematic. So we deservingly associate some of these terms with a asset class that does retail investors no favors. Now, their business model is simply to produce Bitcoin at a cost of $18,915 and then sell it around $64,000. I recall reading that part of the terms of their bankruptcy filing was that, or emerging from protection, is that they need to immediately sell all the Bitcoin that they produce. And you see here, how profitable is that? Well, self-mining, of course, is correlated to Bitcoin prices, and the gross margins there on the right, not overly healthy. Of course, they increase with the price of Bitcoin. And you see hosting margins are less, of course, intuitively than self-mining. And the act of producing Bitcoin and selling it, then your entire business, the success becomes quite correlated to the price of Bitcoin. Now, some thoughts on Bitcoin miners. They're heavily dependent on cheap electricity. And what countries have the cheapest electricity? Well, the U.S. isn't at the top of that list. They now need to compete with AI hardware demand. They're dependent on a volatile digital coin with no intrinsic value. Sure, Bitcoin has more institutional legitimacy with the likes of ARK Invest putting out Bitcoin ETFs and some large investment banks doing the same, or asset managers. But when you invest in a miner, it's not just exposure to Bitcoin. You're exposed to company-specific risk, which always comes, it's Rumsfeld's unknown unknowns. It always comes around to bite you when you least expect it. Supposed to provide leverage on the movements of Bitcoin, and that works only if Bitcoin is constantly going up or staying stable. This isn't guaranteed, and as a result, we could see what happened to CORZ when the price of Bitcoin collapsed. So the reason we're producing this video is based on a comment we received on a recent video on AI stocks, and this individual said that CORZ was crazy undervalued. So I had a bit of back and forth with this person. We don't use language like this. So if you want to say make such a claim, you need to support that craziness with some sort of a model. You can't just state that Bitcoin's going to 10x or 20x as if that's some sort of fact. Our YouTube channel isn't meant as a pulpit to preach about your stock or company as if it's some sort of religion. Now, that said, to one very articulate English teacher out there, thank you for suggesting this topic. Indeed, you are correct. This is an upcoming theme per analysts at Morgan Stanley and other firms. And this article by Barron's just today, crypto miners are AI's new power source. The stakes are huge. Of course they are, right? They talk about here how the gigawatts controlled by Bitcoin miners could go a long way to quenching the power thirst of AI data centers, going back to that earlier comment about the 1.2 megawatts that CORZ Scientific has secured of power. And I think this meme here pretty much spells out what's going on. Now, CORZ Scientific has jumped all over that. And here you can see that power that we talked about, their contracted power, how they're using it today. You see that the operational 745 megawatts is used for hosting and mining, right? We said that before. We showed you those margins. And then look above that, partially built infrastructure. So when this all comes online, look what happens. They actually expect to have a Bitcoin self-mining decline. That's rather odd because if Bitcoin is the next best thing since sliced bread and it's supposed to 10x, wouldn't you want to produce more of it? Well, apparently not. And then they're pivoting into offering high-performance computing services to firms like CoreWeave. We're going to talk about that. Now, this slide from a recent deck, I think two things worth noting here. First of all, that the EV/EBITDA multiples, so just think about valuation. The valuation for data center companies is much higher than the highest multiple for Bitcoin miners. Well, there's a reason for that, and they think that if they pivot into data center, as lots of people are trying to do, they can enjoy higher multiples for their own stock. And they say here, diversified customer base and revenue mix. Okay, double-edged sword. If you're invested in a Bitcoin miner because you believe Bitcoin is the next best thing, then you want that leverage. Shouldn't you want the maximum efforts of this company going into mining? Well, you could also argue then that having a diversification then protects against a future bankruptcy. So I think you can argue that both ways. But the fact that Bitcoin, what it seems to have hit some sort of ceiling here, as you can see on this chart. This firm must not believe that Bitcoin is going to be going up if they're reducing their self-mining capabilities. Now, the reason that this stock price has been soaring lately, I believe, partially at least is related to this unsolicited proposal from CoreWeave, where they offered $5.75 per share in cash for CORZ Scientific, which was rejected. Well, they've been working with CoreWeave. You can see here some of those details as shown on the previous slide. They have this 200 megawatts high-performance computing infrastructure that's supposed to become operational next year. And this very high profit margin is questionable. Note here, there's a 12-year contract with 2 5-year options. Options, very important to pay attention to that word option, right? They talk about billions of dollars, but these options, you always need to pay attention to the fine print there. The concern here, one of them associated with this, is who is CoreWeave? So this slide from CB Insights talks about how NVIDIA is giving priority access to its GPUs to smaller specialty cloud providers. That's what CoreWeave is. And they are in turn offering cloud GPU access at lower cost to enterprise. Two things to note there. First of all, sounds a little bit like subsidizing, doesn't it? You're not going to be undercutting the large hyperscalers you see on this list for very long, right? So CoreWeave is apparently doing that. And wouldn't that seem to be a bit of round tripping going on there? It's hard to say. We're not going to get into that. But if CoreWeave becomes a major customer of CORZ Scientific, then there's revenue risk there, revenue concentration risk associated with a single customer. But our question is, where are these 80% margins coming from exactly? So if you're undercutting the hyperscalers, then you're already compressing your margins quite a bit. And then you're telling me that CoreWeave takes their cut and then there's an 80% margin left for CORZ Scientific. That sounds very suspicious. Now, CORZ Scientific isn't the only Bitcoin miner pivoting into AI. This is from a year ago, so this isn't necessarily anything new. It's from 2023. Bitcoin miners seek revenue with AI high-performance computing. And this article goes on to talk about how there's been some problems mining Bitcoin, and that's why they're pivoting into high-performance computing. And that doesn't sound very good. You look at firms like Hut 8, you see here, explore Hut 8's high-performance computing solution. So it seems to be a theme across numerous Bitcoin miners. And this pivot, they say, follows the recent reduction in Bitcoin mining rewards. So if you're familiar at all with how this works, the rewards dropped on April 19th as part of the roughly quadrennial Bitcoin halving event. So you receive less benefit from Bitcoin mining, and they're talking about how miners like Marathon, which actually has a decent cash balance, I think over $1.5 billion, they're using that to buy up sites to own and operate them. For 54% of their capacity is now owned and operated, up from 3% before the start of this year. So CORZ Scientific doesn't really have much cash on hand to be able to work with, but you can see these miners moving into data center. And the argument here from some analysts, I'm not sure where this was taken from, we found it on Twitter, but this is reminiscent of similar models produced by ARK Invest, for example, for Tesla, where they break out Tesla segments and they assign different valuations to different segments. You can see that in the middle of this diagram. See, mining multiple, hosting multiple, those are at 7. HPC, high performance computing multiple, double that at 15. So that's the argument, is that when high performance computing can be broken out of the revenue segments for CORZ, that they'll enjoy a richer valuation. So it's looking into the future, and that of course requires you to believe that demand is going to stay the same constantly for data centers going forward, and that CoreWeave is going to exercise their contracts, et cetera, et cetera. Perhaps the more prudent way to play this then would be to invest across all Bitcoin miners. And there's an ETF that you can do that with. The ticker is WGMI. Expense ratio 75 basis points, so in line with what ARK charges. But you look here at their top 10 holdings, CORZ Scientific isn't anywhere to be found. Well, that's perhaps because they're just emerging from bankruptcy. But look at the volatility on this chart. Don't pay too much attention to performance aside from that spike there, the recent spike. So if you're going to believe that there's all this unrealized valuation to be unlocked from Bitcoin miners who are pivoting into AI, and that they're going to be able to compete with some of the world's largest companies, the hyperscalers, then this might be a more prudent way to play that. Now, if you're mining Bitcoin at $19,000 a coin and Bitcoin's ready to 10x, as we always hear it's going to, shouldn't you stick to mining Bitcoin? Data center bandwidth sure is in demand now, but what happens when that demand subsides? Is it back to Bitcoin mining again? Bitcoin mining itself, as we said, seems problematic. There's other ways, better ways, we think, to get Bitcoin exposure, especially now with ETFs and the like. A prior bankruptcy is a huge red flag for CORZ Scientific. If you want exposure to data center growth, there are much better places to look for it. How quickly is all this hardware going to become antiquated and new investments in hardware be required for these firms to stay competitive with hyperscalers? Can they compete against them in the long run? Probably not. So if you're wondering what better ways there are to play the growth of data centers, well, we have a piece just for you here. It's the 37 ways to invest in data centers. So make sure to watch that video. We've pinned a link in the comments section of this video talking about our premium subscription offering. Give that a look. Thanks so much for taking the time to watch this today.